Welcome back to Fast Money. A top Silicon Valley firm is doubling down on its crypto bet, and that's got the space hoping for renewed faith among cryptocurrency investors. Seema Modi's at the crypto desk at headquarters with the details. Hi, Seema.
Hey, Melissa. Top venture capital firm Andreessen Horowitz launching its first ever crypto-dedicated fund, and it's a big raise, $300 million that will be used to invest in virtual currencies like Bitcoin and Ether, as well as blockchain-related projects. The fund will be co-led by former DOJ prosecutor Catherine Huan and Andreessen Horowitz general partner Chris Dixon. The launch comes as Bitcoin has lost 52% of its value in 2018. Dixon telling CNBC that the firm is not worried about the recent ups and downs in the cryptocurrency market and that some of the downturns can be the best investments. Furthermore, Dixon says although the Bitcoin white paper is now almost 10 years old, we believe we are still early in the crypto movement. The infrastructure needs to be improved and the applications are difficult for non-early adopters to use. Many crypto applications still get dismissed as toys. We believe this will change quickly. Upbeat comments that certainly may carry weight. After all, Andreessen did make early investments in Instagram and Airbnb, and to date has raised over $7 billion across 7 funds. Also worth noting, Andreessen was one of the first firms in Silicon Valley to put money to work in cryptocurrencies back in 2013 when it invested in Coinbase. However, Bitcoin not catching a break today, down about 1%, 61.80. Melissa, back to you.
All right, Seema, thank you. Seema Modi at the crypto desk. Brian Kelly, Catherine Hahn, what is striking about her background is her DOJ experience.
Yeah, absolutely. And she's been, at the forefront of this as well as Andreessen Horowitz. They've been in it early. And so what's interesting about this, we've talked about, and I've even talked about this wave of institutional money coming. Well, here it is. First wave right here. And the great thing about it is they're going to hold these cryptocurrencies for 5, 10 years, what they're talking about. This isn't necessarily a trading fund. So this is a lot of support for the market.
Yeah, and I think it's $2.5 billion that VCs have invested in cryptocurrencies and blockchain sort of ventures over the past few years. This could really build the space out.
Well, and I think that's really what we hear from the VC community more than anything. I think they're investing in tokens, but they're investing alongside. And I think the platforms themselves are really where people are excited. And that's where these guys are getting their credibility for really digging deeper.
All right. Well, many believe the emergence of institutional players will drive crypto. Our next guest says there's an even bigger catalyst on the horizon that could bring about a crypto comeback. You at home. Bart Smith is the head of digital assets at Susquehanna, but he here is known as Wall Street's Crypto King. Hope you like your nickname. Great to have you back. So retail investors in the form of what sort of comeback do you think they're going to make?
Well, so the narrative has been about this institutional wall of money. And in Andreessen Horowitz, it's $300 million. It's a great story, but they're venture capitalists. Like they're fintech venture capitalists at that. And so I don't feel like that's a tremendous departure from what they've done. If it was a big asset manager or like a brand name hedge fund, that probably would have more catalysts in the space. And when you talk to those folks, you don't really get that first mover sense of urgency. I think an area of the marketplace that hasn't been touched upon as much is Secretary Hinman from the SEC 2 weeks ago when he talked about Ether no longer being a security and kind of stating why. It left out that, well, a lot of these other tokens don't meet those criteria. So are they going to be securities? And if so, are they going to need to be on broker-dealers? And so that's an interesting part of the market. And frankly, where you have seen demand is from retail people in the U.S. Coinbase, Gemini, Circle. All of those people are servicing retail investors.
So we're thinking, when we think about retail investors, we're thinking about the guy at home. And it may include the guy at home, but we're also talking about sort of high net worth individuals who may be going through their RIAs, so they have more capital to expend. Why do you think they are now going to get in? Are they the same people who were in at the height? Or are these different people? Well,
there's over 600,000 registered reps in the United States, and the vast majority of them are not able to advise their clients to buy Bitcoin. And so as the regulatory clarity kind of opens up and all of a sudden you're seeing, there's an opportunity for some of the firms out there. So at the bottom end of the spectrum, you have kind of the disruptor, right? Like the Robinhood, who now offers to their 4 million, mostly millennial customers, Ether and Bitcoin. And then at the kind of the top of the food chain, you have Abigail at Fidelity, and they're building out, a crypto platform there. And so in between, you have all these other players where there is a real kind of sense of urgency for an asset grab.
So, Bart, we're sitting here in the U.S. We get very focused on the U.S., but crypto's a global asset. Yep. More than 50% of the volume traded is in Asia. I'm starting to see a lot of Asian family offices, high net worth investors come in and buy this market. Is that more of a catalyst, perhaps, than the U.S. retail investor?
It is, or I mean, in general, you've seen this in the past where the RIA market has led institutional, right? And that's what happened in the ETF world. In the early stages of ETFs kind of coming to market in the early 2000s, institutions called them a fad and dangerous, that they were inefficient. And what the RIA marketplace did is they took these tools and used them to build portfolios. And as they gathered assets and they started doing institutional-sized trades, that ended up being kind of the case study for larger institutions like pensions and endowments, insurance companies using ETFs. I think in this space, you could see the same thing, where you see large pools of retail, non-institutional assets, but family offices kind of act like small institutions. And so I think that might be a proving ground where you see, once again, kind of the lower end of institutional leading larger.
In terms of institutional demand, what have you seen? What did you see as Bitcoin tested its year's lows?
So again, I think that the institutional world is looking at this, but there doesn't feel like there's this, I got to move now, right? If you look at most of the people who manage hedge funds in the crypto space, for the most part, they're not people like you. They're not capital markets people. They're engineers, they're computer scientists who haven't really managed people's assets before. And I think that they feel like in the hedge fund world and the big asset management world, I could move. I could grab one of these funds, or I could launch my own, and I would have a very competitive advantage, given the fact that I already have institutional customers. The smaller hedge funds who are in the space, they don't have those institutional customers to call on.
All right, Bart, great to have you with us.
Thank you.
Crypto King.
Yes.
Of Wall Street, yeah.
The Crypto King. I mean, look at.
What have you seen in terms of your interest?
So it's interesting. So I brought up the Asia part of it because we do get focused here on the U.S. and what we have seen is a lot of demand coming out of Asia. And the feeling is that, listen, this is an asset class that's not going away. It's something that we want to have some portion of allocation to it. And, the institutional demand is probably the family office high net worth. I agree with Bart, though. If we can get retail money and, Fidelity coming on board would be massive for the space. And that's going to come.
So, Beaky, let me ask you, what comes first, the chicken or egg being the investor themselves saying to their RIA, I need this allocation, or the other way around?
I would guess that you get somebody, let's say Fidelity, choose them an example. You get them, there's tremendous demand for the Fidelity product buying Bitcoin, then the RIAs come in and say, okay, we're going to go and do this.